Welcome to the monthly Truck Stop webinar presented by the Motor Carriers Education Foundation as a part of the Transportation Risk Specialty educational programs. The Truck Stops are presented the second Thursday of each month at 2 p.m. Eastern Standard Time. These webinars are not presented, these webinars are presented as an industry update for informational purposes only and are not qualified for state CE credit. The foundation does provide state CE credit, and if you're interested in these programs we do for state CE credit, please contact Beth in our office. So at TRS@ibci.net, we do 12 hours each year of state CE credit, but this is for informational purposes only. If you have any questions during this program, please type them in the chat window. They will be answered as time allows, or responded to after the webinar via email, which happens most often here, and we will share the questions and answers to the audience. If you experience any problems, audio problems, or problems, just send us a note again in the chat window, or call us at 800-741-4084. We will attempt to correct these problems as soon as possible. Once this presentation is over, we do provide this on our website as a part of the Truck Stop series, so you can replay them or share this with any of your insureds or with any of your other people in your organizations later. So it takes about 4 or 5 days before we get it up on our website, but you can find it under the Truck Stops in the Motor Carrier and the Transportation Risk Specialist .com website. So we refer you to that. Transportation Pollution Liability Trucker's Guide. We reached out to Cody Barden, who's Associate Underwriting Manager, Environmental Energy with the Markel Wholesale Southwest Regional for the Markel Company. We talk about pollution coverage often in the presentations I do on a face-to-face. Some of you have been involved in those things. We know about the CA 9948 endorsement that we add to the policies that address pollution losses, both bodily injury, property damage, and cleanup caused by pollution. We understand the exposures under the MCS 90 for the environmental restoration, which would include a part of pollution cleanup and damage done. And we're going to look in this time we have with Cody. He's going to go through where comparing the 9948 endorsement, if you have it, where there might be some exposures over and above that your insureds have that these standalone pollution policies would address. In addition to that, we do have some motor carriers who don't offer pollution coverage, the CA 9948 endorsement, or their own variety of them, a lot of them without the full policy limits, where you would need to add these endorsements. You might want another coverage, standalone coverage over and above those. And lastly, as you know, when we talk about general liability, we talk about the items on your insured premises that could create a pollution exposure. We understand if they have a garage that this would be how they get rid of the fluids and the garage work. We talk about if they have fueling facilities, and a couple things are coming up you might not think about. If your insured has washing of the trailers, a lot of that's done with an acid that could be a pollution problem. If they park their vehicles on the premises, I actually had a case here where a tanker that was loaded, it leaked from their premises and went into a creek. And lastly, as a part of this, is that now with the requirement of the food transporters to clean out the previous hauling, even though what they haul you might not consider a pollutant, but by the time you wash it out, it might develop into a pollutant. And so what I asked Cody to talk about the policies he has and compare them to CA 9948 and go that. And before I do that, Cody, I'll be finished with this now, and it's up to you, my friend. So let's move forward with your presentation, if you will, and then as we go through, there might be some questions that we might have.
Thank you, Tommy. First and foremost, thank you very much for getting this together. Yeah, we're just going to jump right into it. So I want to give a brief overview and kind of the general purpose of this presentation. So if you go to on this slide, you're going to see that the purpose of this presentation is to give a broad overview of transportation pollution liability. You might hear me refer to it as TPL. This is kind of the industry acronym for transportation pollution liability. So if I say it, just know that I'm referring back to transportation pollution liability. So we're really going to define it, give you some claim examples, kind of, the pros and cons of TPL. And this presentation is really for instructional purposes. So this is a good starting point to kind of, let you guys understand a little bit about the transportation pollution liability realm, as well as the environmental space in general. So for anything individual, please reach out with additional questions, or reach out to a consultant or a specialist. So moving on, we're going to go to the presentation outline. So if you take a look at the presentation outline, it's basically, we're going to kind of lay out how this is going to go. First and foremost, I'll give you a little bit of background on myself, kind of let you know who I am, as well as define transportation pollution liability. So we're going to give a brief definition to take home. Additionally, we're going to go through, kind of the why, right? Why do truckers need pollution coverage? So we're going to compare some claim examples, some claim scenarios, as well as compare and contrast the TPL to the CA 9948. There's a little bit of overlap between the two, but there's some differences between the two. So we're going to kind of expand on that. Give an overall market condition update of the environmental marketplace. It's much different than the auto marketplace right now, so there's going to be some updates with that and a general overview, as well as submission requirements. So when you're looking to get transportation pollution liability, what are the submission requirements? Last, and certainly not least, we're going to discuss some of the add-on coverages and enhancements. This, to me, is the most exciting part of transportation pollution liability, because it allows for you to package, TPL with some other coverages, including site pollution, tank coverage, products pollution, non-owned disposal site coverage, non-owned location coverage, and contractors pollution liability. And we'll delve into each one of those add-on coverages and enhancements further in the presentation. So moving on, we're going to talk a little bit about my background. Who am I? There's a lovely headshot of me. So my name is Cody Barden. I am an associate underwriting manager for Markel. I manage the southeastern territory for environmental and energy product lines. So our territory reaches from Virginia all the way down to Florida, over to Alabama, up through Kentucky. So kind of that deep south. So we see a lot of manufacturing risk, a lot of contracting risk, and a lot of trucking risk. So we do see the full gambit. We also see quite a bit of energy risk that kind of bleed over from West Virginia. So we do have experience there as well. I've been doing this for about 6 years, all of which has been with the environmental and energy product line. I hold a Bachelor of Science degree from the University of Virginia in environmental science with a minor in chemistry. So if I get too nerdy, Tommy, you just pump the brakes on me a little bit.
Believe me, I can dummy things down. I swim in that pond.
Awesome. Well, I got my master's in business administration from Virginia Commonwealth University with a concentration in corporate finance, and just recently got my CPCU this past year. So I got to go to Hawaii and enjoy the beautiful sunrise and sunset of Hawaii. But here in this region, we handle a wide array of pollution-related risks. This ranges from site pollution to pollution for contractors and pollution for transportation-driven risk. We also do packages as well as, pollution-related risk in the energy sector. So, we do some, general freight work with TPL and site pollution, and we also do, TPL and site pollution for energy-related risk.
I want to point out, Cody, a second. For you who deal with this and who are retail agents that are listening to this, where you access Markel is not Markel Direct. Your wholesalers that you do business with most of them or a lot of them have contracts with Markel, so they can access these products that you're talking about through Cody, through the wholesale industry, if you need to add that in. And I guess, Cody, they could go on your website or give you a call, and you would refer them to a local wholesaler that you do business with in that geographical location.
Yeah, exactly. So, we're wholesale dedicated, so we only work with wholesalers.
And most of the wholesalers involved in this marketplace are members of our foundation and help us present those kind of things. And we have the full gamut of those people. So just want to let you know how to access his product is through your local wholesalers, and they have these products available. So for you who are retail agents, just contact your MGAs or your general agents or your wholesalers or your intermediary, whatever you want to call them, that you're doing business with, and they can lead you to not only his product, but there's his competitors. And as always, we talk about those, and he doesn't have a problem dealing with his competitors that can offer these kind of products.
Yeah, absolutely. And thanks for pointing that out. So we're a nationwide company. We're actually a global company, Fortune 500. So just contact your local wholesaler to get a quote. So moving on now, we're going to talk about really the starting point. What is transportation pollution liability? And now let's just talk about the definition. So transportation pollution liability provides protection for products or materials transported, shipped, or delivered by the insured or by a carrier on the insured's behalf. So really, if you're taking a look at that definition, there's two parts, right? There's kind of the first part that addresses first-party transportation pollution exposures. So this is, pollution exposures that the insured would become liable for due to their own transporting activities, right? But there's also a kind of a second clause where it says or by a carrier on the insured's behalf. So this is probably more relevant for contracting-related risk or manufacturing-related risk, but I think it does play a role in trucking-related risk as well. Is that if another carrier is transporting, goods or services or goods or products on the insured's behalf, there is third-party coverage. I think that's an added enhancement for transportation pollution liability.
Excuse me, read this. So what we're saying, if that this is a product the manufacturer or the shipper might have, that they're shipping something that's pollutant, and therefore the transportation entity, our motor carriers, our truckers have this crisis of pollution loss, their policy obviously would be primary. They're the negligent party, the tortfeasor, but the third-party shipper could be the potential responsible party, and so this product would then step in and be either excess or primary, depending on where the bottom coverage is, to protect the actual shipper. Is this what we're saying here when we talk about third-party transportation liability?
Exactly. So, it's if they take, they're named in a suit where let's just say the actual carrier is really the at-fault party, but let's just say the manufacturer is deemed to be partially negligent, depending on the state. They would have protection with the transportation pollution liability and that third-party clause. Not every carrier has third-party coverage, but I think the vast majority of policies right now have third-party coverage.
And this would apply if the shippers, it could apply people who are doing loading and unloading and packaging and all could have that exposure that we bought in the suit if those things are done wrong. So that's something I was just looking at that part of it. Okay, let's go to the next one. Typically, the coverage includes.
Yeah. So, coverage is going to include, bodily injury, property damage, cleanup costs. The definitions for bodily injury, property damage, are probably going to mirror, an ISO GL type policy pretty closely. Cleanup costs is something that's going to be unique to each individual, transportation pollution liability form. But most, coverage or most PPL policies are going to have coverage for all three. Coverage, kind of at a bare minimum is going to include upset and overturn. But the vast majority of forms are going to specifically include loading and unloading. The mechanism to add transportation pollution liability, there's a couple different ways. First, there's monoline transportation pollution.
I want to go back to loading and unloading. This is particularly would be important if your insureds are tankers and these kind of things who are responsible for loading and unloading when we're talking about the motor carrier. A part of this other is also obviously is where the shipper is involved in it that would have some liability if it's loaded and unloaded improperly, or if they are loading and unloading, this would cover them. So again, we're talking about two possible insureds here would be our motor carrier or the third-party shippers that are the people who are shipping and holding it. Is this what we're talking about now, or you're just focusing on the shipper or the receiver?
Yes, correct. So, if the insured is, let's just say, a good example is, petroleum, right? They're hauling gas or, hauling tanks of chemicals or something like that. And there's, a pretty real unloading exposure. Let's just say if they're, unloading it, at a commercial site, into a commercial gas tank or something like that, and there's a spill. There's some coverage there under the transportation pollution liability. So, so the mechanism kind of to add transportation pollution liability is going to be either monoline or endorsed to a contractor's pollution form. So there's a couple of different ways that it can be done. So,
Cody, yes, don't get confused when you talk about a contract pollution liability form. They also would address the trucker's exposure. That's just the form number that they typically add that to. Is that what you talked to me about earlier?
Yeah, exactly. So and we'll discuss later in the presentation, but kind of the mechanism that most carriers add the transportation pollution liability coverage is underneath a contractor's pollution form. So you're kind of getting, you're getting the transportation pollution liability coverage, which is what you're concerned with, but you're also getting contractor's pollution as well, since that is the mechanism to attach TPL coverage. So yes, correct. That's how we address it in the industry typically. So why does a trucker need transportation pollution liability? So this is kind of the why of this discussion. Why do we need it? And there's a few claims examples. The ones I'm going to show you, because they're certainly much more frequent for us, is going to be contractor related, but a lot of these claims examples are really translatable onto the transportation industry in general. These are all TPL claims, but these are TPL claims stemming from contractor-related risk. But again, should be pretty analogous to what we'll see in the transportation realm. So first example, just to kind of read through it real briefly, it basically the insured waterproofing contractor was traveling to a job site and had a tanker truck containing liquid waterproofing material. So it had a chemical that was to be used at the job site. The vehicle became involved in a collision, and 100 gallons of the product were released onto the road. Both insured vehicle and third-party vehicle sustained damage. Additionally, the spill was remediated, reported to the Department of Environmental Protection, and was remediated. So this is a quintessential example of an upset and overturn, right? There's an accident, there's a collision, there's a spill of chemicals, and was successfully remediated. If we go to the next example, you'll see that very, very similar. This is a little bit more of a transportation-related exposure versus a true contracting exposure. The insured was in the business of collecting and disposing of used motor oil from an auto repair shop and other vendors. After several pickups in the course of travel on a throughway, the truck hit a slick area on the road and overturned, totaling the vehicle and spilling 500 gallons of used motor oil onto the road, which then flowed into the stream that abutted to the residential area. The spill was reported to the Department of Environmental Quality, and an emergency response team cleaned up the road, and the insured was responsible for investigation, water impacts, significant remediation efforts, future monitoring costs, and since the location was in a pretty remote area, far from the city, remediation efforts were significant. So these two claim examples are pretty straightforward upset and overturns, right? This is the most common thing that we see. And there's a couple of take-homes here that I want to leave you guys with. And first and foremost, in the second example, claims example, we see that it's $700,000. It's very expensive. So these pollution claims can get very expensive, and $700,000 is by no means the largest one we've ever seen. And the second thing I want to kind of leave you guys with is that, in these two claim scenarios, one was a chemical, one was a petroleum hydrocarbon. These two things people readily see as pollutants in the industry. Even a lay person walking down the street would know that these are probably considered pollutants. The claims, the different claim scenarios that I've not presented that are a little bit more unique are where the pollutants wouldn't necessarily be considered pollutants by an everyday person. We've had a milk truck, upset and overturn and spill out into a stream, causing certain remediation efforts to clean up the stream. We've had dust be considered a pollutant, depending on the state and depending on the nature of the allegation. We've even had mulch that mulch was dumped at a dump truck was transporting mulch to a job site, offloaded the mulch sat there, and a rain event happened. Well, that mulch, you don't realize it has certain compounds built into it, certain organic compounds, and when rain hits it, it creates something that's a little bit acidic. Well, this runoff happened to go into a prize koi fish pond that killed about $250,000 worth of koi fish. So again, the take home here is that just because it's not a hydrocarbon or it's not a chemical doesn't mean that it's wouldn't be considered a pollutant in the court of law. So moving on from there, let's do some of the comparisons between TPL and the CA 9948. And so these are kind of high level comparisons, but I think are really important. So with the CA 9948, typically it's going to be admitted. And correct me if I'm wrong, Tommy. I'm not an auto underwriter, but I think there's only 2 states where you can be non-admitted for auto, and that's Louisiana and I think Texas, right?
No, that is misnomer in that part.
Okay.
There's actually about 23 who control admitted or not admitted is Department of Motor Vehicles, the DMV, what they accept for proof of financial responsibility. One of the states that you mentioned that does accept non-admitted is California. They accept non-admitted product, but even though it's not admitted, unlike most of the non-admitted products that you're dealing with, which is where it's not filed and you can do your own things, most of these policies do conform to the ISO auto policy. And
gotcha.
this would be added, so it would be standard coverage that you would find in CA 9948. And that you add to these policies. There are, just as we point here, there's about 4 variances they need to be aware of. There's a couple out there who don't use this endorsement, but that have similar language to this. Yep. And one of the out there has a little difference in how they address the contractual exposures. There's a couple out there that provide pollution coverage, but they limit it to a sub-limit on the policy, not the full policy limits. And then clearly the 3 states that mandate endorsements, Vermont, Virginia, and New York, mandate a policy issued under their state Department of Insurance, meaning vehicles domiciled in that state, policies covering those vehicles domiciled in that state, and the policies issued under those states' Department of Insurance have a mandatory endorsement that modifies or restates the pollution exclusion to allow pollution coverage to the full limit of the policy, including bodily injury, property damage, and the cleanup. So that's where we're dealing here. But most of the ways it's met is through the CA 9948 endorsement. But it can be admitted or not admitted. But I would rather use the word here, Cody, it is attached to the standard policy and it's a standard wording.
Yep. Yeah, I agree. And I think that kind of brings me to my next point, is that the CA 9948 is a standardized form, first and foremost. And so you kind of know what you're getting. When you ask for a CA 9948 and you get a CA 9948, depending on the edition dates, right, they're all going to be about the same. So, and these are going to be
even the edition dates haven't changed, so that we're fine with that. That'll be it, that part of it. A lot of carriers automatically add it to the policy without asking for it, by the way.
Exactly. So, and one of the things with, and we'll kind of compare and contrast the TPL, right? And the TPL, one of the biggest things is that it's almost all of it's non-admitted. So it's all going to be excess and surplus, non-admitted business. It's all going to be aggregated. So instead of a combined single limit, you'll see something like a 1 mil occurrence and a 2 mil aggregate, or a 5 mil occurrence and a 5 mil aggregate. Typically, especially for smaller size risks, there's going to be a much higher deductible with TPL. $10,000 to $25,000 for a very small risk is not unusual in the marketplace, where the auto policy may be either first dollar or very low deductible. So TPL, as we mentioned earlier, has third-party coverage. Again, this is not ubiquitous across the TPL market or the transportation pollution liability market, but there is a coverage enhancement that the majority of carriers are willing to give. Typically, the definition of pollutants is going to be broader. Again, these are underwritten in environmental units, and environmental underwriting units are very attuned to the pollution marketplace. So definitions have expanded. Some of those definitions can be silt and sedimentation to be included as a pollutant, biological pollutants. So things like if you've got somebody that's a medical waste hauler, that can be very helpful for their coverage. There are radioactive substances, including low-level radioactive waste, can be included under the definition of pollutants. And so if you have somebody that's haulering hazardous waste or radiological waste, or radioactive waste, I should say, that is potentially covered definitively under the definition of pollutants. So from there, most TPL forms have a definitive loading and unloading coverage grant. And this is a big difference with the CA9948 compared to the TPL, in that there is definitive loading and unloading on most of these forms. So, so if you have a little bit tougher of unloading and loading exposure, like we talked about with somebody unloading chemicals at a chemical facility, or a petroleum hauler that's unloading petroleum at a house or something like that, there is definitive unloading and loading coverage there. So it's not just limited to an accident. It's not just limited to an upset and overturn.
Cody, let me spend a half a minute here just to emphasize
Yes,
this. If you're loading and unloading a tanker with a hose out, that's by hand. That would still be auto CA9948. But if you're unloading with a forklift and you're unloading 55-gallon drums of things, even though you have a CA9948 on your auto policy, if you're unloading that mobile equipment and then it drops off and it spills and we have that problem, that then falls back on the GL. And typically the GL policies would not have pollution coverage in it. So that's where the gray area would be.
Exactly. So most standard general liability policies are going to have, the CG 2149 pollution exclusion, total pollution exclusion on there, or something similar. And so, in your example, when you're using a forklift, if you've got, transportation pollution liability, that we basically don't make the distinction there where we're excluding because of the use of mobile equipment.
You just told me load and unload, no matter how it's done, either by hand or forklift, that would be where the area. Yep. But my point is, if your insurers are responsible for loading and unloading with any mobile equipment, that would not be auto. CA9948 would not address that exposure. That's where the gray area would be between the two.
Exactly. And like I said earlier, most of the environmental markets attach the transportation pollution liability form to a contractor's pollution liability form. So it's, even if it's, maybe something a little bit more robust than just simply unloading your truck or unloading the chemicals by a forklift, let's just say there's, ancillary setup or, ancillary, work being done. Most offerings are going to include contractor's pollution anyways. So there's a little bit more coverage there. So one of the exciting things about TPL is that it can be packaged with other pollution coverages. So whether it's site pollution, whether it's products pollution, some of the other types of pollution offerings that we have, there's ability to be packaged for basically a discount. So that's probably one of the bigger differentiators. Also, it may be more available. The environmental marketplace we'll discuss a little bit later is really competitive right So they are more willing. We're mostly more than willing to give transportation pollution and pollution in general, to a wide array of risks. There's a lot of options. We talked about the non-admitted, and kind of freedom of rate and form that the excess and surplus lines has. There's a lot of variable options. So there may be some really robust coverage options that might be really expensive. There may be some value options, and there may be some, very affordable but not so great coverage options out there. So it's really a wide open market when it comes to transportation pollution liability, as far as the options that are presented. And this is where it's really important to read through the policy language and understand what you're getting for your money. So what about the MCIEF 90? So, most of the people that, we deal on a day-to-day basis are not transportation experts by any stretch of the imagination. And we always get this question, why do I need TPL when I already have the MCIEF 90? And so the important thing to kind of remember is that the MCIEF 90 is an endorsement that attaches to the auto policy that basically ensures that there's adequate limits and there's environmental restitution for any upset and overturn. But it's not a true risk transfer mechanism. There's actually a clause in there that if the coverage, if there's an MCIEF 90 endorsement on there, but there's not a CA 9948, and there's an upset and overturn, the MCIEF 90 will respond. However, the carrier that issues the MCIEF 90 has the ability to seek reimbursement from the insured if coverage was not otherwise would not have been covered otherwise, except for that MCIEF 90 endorsement. So it's not a true risk transfer mechanism.
Yeah, Cody, I hope everybody who hears this has heard me more than once to say this is not insured. The only person who's protected here is the public. The insured is not protected. Never talk to MCIEF 90 as coverage. Never refer to it coverage, because it's never coverage, because exactly what you said. The other thing you mentioned here is that this is a situation where you have no coverage, and therefore your cleanup has to be involved if you're listening to me and you're an insurance carrier. And the problem is, for an environmental loss, the worst thing you can do is sit there and wait for the judgment to be rendered against your insured for that cleanup, then have to pay that judgment. The best thing to do is step up and take the remediation right now and get it cleaned up right now. It's only going to get, pardon the pun, more smelly later than now. So if you wait until, because MCIEF 90 only steps in after a final judgment is rendered against the insured. And that is, in most cases, that's too late to worry about a pollution loss.
Yeah, and I 100% echo that sentiment. We actually have a claim now, talking about, slow reporting of a cleanup effort. We had a claim. It was actually for a salt water hauler. And so it was a trucker that was hauling salt water for the fracking industry, I believe in Texas, remote Texas. And no, it was North Dakota. I'm sorry. It was in North Dakota. And, the saltwater tanker turned over. Well, salt water, once you hit the ground, basically nothing can grow. And it's very difficult to clean up. And because basically the water dries up and it's just, salt that's basically part of the soil at that point. So basically the only thing you can do is dig it out, or there's some alternative methods where you can, purify it. And we had a particular claim that the difference, they reported to us about a month later than what we would have liked. And the difference in cost for the claim was twofold. It went from $250,000 would have been the estimated remediation efforts to about $500,000. So just imagine that with, no coverage, right, for the insured, where they have the MCIEF 90 and they assume that they're taken care of, and they don't report it, and it gets worse and it gets worse. And all of a sudden the final judgment comes up, across, and it's $500,000, and the insured's on the hook for every single cent of it. So,
Cody, let me say, so they clearly, because that's a great example. The problem is they're going to sue for that. The MCIEF 90 provides no defense. If there's no coverage in the policy, the insurance carrier will have to, they will deny coverage. There's no defense. And now the judgment is against your insured, which is going against their credit scoring. And if the MCS 90 has come in and paid, then they're going to seek reimbursement against your insured for that. So this is the lack of coverage, either CA 9948 or relying on or the standalone policies for this situation. So you're absolutely right. It bothers me where we can't get it on their auto policy or don't require a second thing here is because when I look at a pollution loss, the ones I have experience with, the best thing to do is get there before the fire chief can call their brother-in-law in the green suits to run the bill up.
Yeah, exactly. 100% agreed. But so when in doubt, the CA 9948 and the transportation pollution liability form are much better risk transfer mechanisms and take care of the insured much better than the MCS 90 could ever hope to do. So with that, we're going to go into market conditions. So let's talk about the marketplace a little bit. And this is very different than the auto marketplace right now. It's extremely competitive. I'd say right now, depending on class, there's some tougher site pollution business that's written primarily retail direct that doesn't, Superfund sites, heavily polluted sites, things like that are not part of this presentation. That it's a little bit tougher, but for the most part, your standard contractor, your standard TPL endorsement or TPL coverage. Site pollution for a relatively easy site like a truck yard or something like that. It's extremely competitive, and we're talking about flat, plus 2% to minus 2%, kind of that range of depending on venue, things like that, of where the marketplace is. Minimums are going to start at $2,500. Now, this might be lower or higher depending on carrier and the class, right? Whether it's long haul, whether it's short haul, whether it's X amount of vehicles or 100 vehicles or 10 vehicles. So minimum premiums definitely vary pretty widely here, and some premiums can get as low as $1,500. But I caution you on that because that may or may not include more robust coverages like transportation pollution liability. Carriers right now, there's about 35 plus environmental markets. I think if you wait a week or two, there'll probably be another 2 or 3 out there. It seems like a new one's popping up every week. And there's plenty of A-rated carriers. Most contracts, most robust contracts require A paper or better. And so if, there's no shortage of A-rated carriers that can offer pretty robust coverages, as well as pretty affordable coverage as well. $15 million in limits from a single carrier is pretty doable right now. I'd say the majority of carriers have 15 mil capacity. Some might have more, some might have less. And I think if you're talking about creating an excess over top of a transportation pollution liability coverage, you can get that done pretty quickly in the marketplace, and 100 million in limits is pretty quick.
Let me stop 1 minute here,
yes,
and because that is an exposure that I found in a couple places where you have the auto liability policy. You might have $1 million, and you might have a CA 9948 endorsement on it that will give you $1 million, but you write an umbrella above that. Typically, the umbrella policy, or very often, let me use that word, very often the umbrella policy will not be following form for pollution coverage. So even though you got an umbrella that might be 5 or 10x of the 1 million, you need to look at that excess policy, quote, umbrella policy, to address the pollution exclusion possibility in it. And very typically, it will have a pollution exclusion in it.
Exactly. So most standard excess and surplus, or excess and umbrella departments are going to have a pollution exclusion. Some don't, but some do. And so you might have to build up kind of a separate, transportation pollution tower to kind of address that deficiency. So it's something that can be pretty quickly done. File a form over, just monoline transportation pollution or, transportation pollution package. And there's plenty of markets with that capability. So as far as comparing forms, we kind of touched on this earlier. None of the forms are standardized, and so So I do encourage everybody to, to work with your wholesaler if you're working with a wholesaler to figure out what the best coverage is for your client. So next, submission requirements. So this is kind of the housekeeping of it, of the presentation, in that, what's required for, transportation pollution liability quote. First and foremost, auto and or transportation pollution liability loss runs. So most insureds probably don't have, transportation pollution liability if they're, strict auto carrier. So we'll, as an environmental market, we underwrite to the auto loss runs, right? And if they've had both, most carriers ask for both loss runs. MVRs, so we want to take a look at the MVRs to make sure that there's no, no habitual offenders on the driving, with reckless driving, anything like that. Transportation pollution liability or environmental app. This is typically asked in addition to your, auto accords or your auto supplemental. And last but certainly not least, a vehicle schedule with radius and commodities being hauled. So I'd say, from a bare bones minimum, in order for an environmental market to give you a range or a price range, a vehicle schedule with radius and commodities and loss runs are the starting point. And the TPL app, MVRs, and ancillary information are kind of the fine tuning to get you closer to that final price. Additional requirements may be requested if coverage enhancements are desired. So, if you're looking for more robust environmental coverage outside of transportation pollution liability, there will be additional requests. So,
is there a rating, Cody? Sometimes is there a rating on this on a per vehicle rating, or is it usually an aggregate rating, or how does that function in?
The easiest answer is it depends on the carrier. Some carriers, and I say that tongue in cheek, but
no, I understand that. That's a good fallback point. I understand that, but go ahead. I'm sorry.
I'd say your more sophisticated markets are probably going to use a combination of revenues as well as the vehicle rating, a per vehicle rating. That's the most appropriate way to do it. There's other carriers that may not be that sophisticated, so I will just leave it as it depends. It depends on the market, depends on the class of risk. Certainly, heavier transportation exposures, there's probably going to be a per truck type charge.
Before we go into enhancement, so basically what this would do is if we compare it with CA 9948, this would provide what the 9948 would provide with, in most cases, a better definition of what's a pollutant that would address the loading, unloading, both by hand, which is auto, or by forklift would be GL, for the turnover or the leaks or those kind of things. Is that, and it's all auto driven. Is that a fair summarization of
I think that's a fair summary. Yeah, I mean the biggest points, kind of the biggest differences are the loading and unloading, as well as any additional setup or anything like that, as well as the definition of pollutants is broader. That's usually the two biggest hallmarks of a transportation pollution liability form, and we've actually found out that a lot of sophisticated clients request for both. If they're a larger carrier, they're going to ask, and when I say carrier, I mean auto carrier. An actual hauler here. They're going to request for the CA 9948 and the TPL because they want to make sure that they have, adequate coverage, for both, some of the over-the-road exposures, and also have additional coverage that the TPL and or contractor's pollution can provide.
Now, if you have a CA 9948 as a part of the auto policy with a company that you would accept, getting back to the excess stuff, does that would be favorable rating considerations, would it not be? Because now you have something in front of yours for a lot of the cases.
That is correct. There is a credit applied, and again that varies by carrier, but I can just speak for our end. There is a subjective credit that is applied. Correct.
Okay. Now we're talking about enhancements, right? Is that the next?
Yes, sir. So we're going to talk about enhancements. And again, I think this is one of the biggest benefits to transportation pollution liability is that you have access now to packaging your transportation pollution liability with more robust coverages for your site. So the first and foremost is site pollution. You may have heard this as environmental impairment liability, pollution legal liability. There's a whole host of names, but we kind of just group it all together as site pollution. So what is site pollution? So site pollution is exactly what it sounds like. It's pollution for your owned, operated, or leased location. It's meant to provide coverage, for that location. Anything that's emanating from that, migrate, a pollutant that migrates off your premises or on your premises. So let's just say you have a tank leak, and the tank leaks on your premises. There would be potentially on-site coverage for that. If it migrates off your property to the neighboring property, there's also some coverage for that. So again, it's kind of the same thing with transportation pollution liability. It varies from carrier to carrier, but kind of the hallmark of it is it's pollution for your owned, operated, or leased facility. Now, I do want to kind of take a step back and say this is I want to compare and contrast tank coverage, because I'm sure a lot of you probably have tank coverage for your contractor's yard or your truck yard or warehouse, or may have seen it in the past for some gas stations.
Cody, we're talking about underground storage tanks or above ground storage tanks. In most states, there's a requirement for not only to make sure those tanks are policed and barricaded and all that, but also coverage on that. And the people who fill it up have to make sure that the coverage is there. Am I correct on that part of it here?
Yes, you're correct. And so
this is what we're talking about: underground storage tanks exposures.
Yeah. So underground storage tank coverage, it's commonly referred to as a tank policy.
Right.
And again, it does exactly what it says. It only covers pollution from that tank. So if kind of looking at the scenario at the lower right-hand portion of the screen where you have an above-ground storage tank that may only have tank coverage, if it's a covered pollution event that that tank leaks, that tank coverage is going to respond. But so will the pollution legal liability or the true site pollution. Where the difficulty is when you only have tank coverage, and if you look at the screen, the guy washing his truck on the lower left-hand side, he's washing, he's typically using some type of chemical, a detergent. There might be some grease or petroleum hydrocarbons left on his rig. That washes down into a storm drain. He gets slapped with a potential cleanup effort, or it migrates off his property to another property. That tank policy will not respond to that cleanup effort. So there is a gap there. Whereas site pollution will respond to both events, right? So not only the tank leak, but also the other environmental exposures that happen on your facility. So that's an important note to remember, that tank policies are really, really limited, and that they're only going to cover the tank. Site pollution is going to cover the tank as well as all the other on-site exposures. So it's a little bit more robust. If it's a clean facility, no adverse history there, coverage can get really competitive on this stuff right now. So I'd say if you're looking to have a little bit better coverage than just your monoline tank opportunity, site pollution is available. Most carriers, again, are willing to extend to the fuel tank coverage to the fuel tanks, more than willing to extend coverage to truck yards, parking lots, warehouses, truck shops, things like that. And within site pollution coverage, there's a couple different things that you can do. You can let's just say you want a really cheap offering. Well, you can cover just the above ground exposures. You can exclude all the underground exposures. So basically what that says is if you have a tank leak that stays on the surface and doesn't contaminate the groundwater, it's going to be a cheaper alternative. But again, there's a gap in coverage there, but there are some really interesting options available to you in the site market. So next, we're going to discuss product pollution, and this may or may not have much bearing on the call, but there are some manufacturers that have pretty large transportation pollution liability exposures, and they also manufacture their own products. So, if they manufacture their own products, most ISO-GL, casualty markets will exclude pollution for that product. So let's just say they're manufacturing, chemicals, and they're packaging them in these totes like you see here, under their label, with their name on it. Well, once they, ship it from their facility to, their customer, they have transportation pollution, right? So if there's upset and overturn, they're okay there. But once it goes onto the shelf, once it goes out to the consumer space, the transportation pollution liability does not extend to that. So products pollution is the offering that's meant to kind of, ensure that there's minimal gaps. So that would be the offering that most environmental markets would give to that kind of class of business. Moving on from there is non-owned disposal site coverage. This is typically referred to as NODS, N-O-D-S, or landfill coverage, or disposal coverage. There's a whole host of names for it. But kind of the basic premise here is that the insured has something that's going to wind up in a landfill, right? There's exposure. So if they have something that they are hauling and it winds up in a landfill and causes a pollution condition to which they are named, this particular coverage part would provide coverage. So it's the kind of the hallmark here is that the non-owned disposal site cannot be owned by the insured, right? It's not if they own the landfill itself, there's no coverage. But if let's just say they're like this trash hauling guy on the screen, and they don't own the landfill, but they pick up waste and they pick up car batteries and they pick up chemicals and they pick up paints and things like that. Well, when they offload it at the facility, let's just say it's a specialty facility that perhaps you have to package it a certain way. You have to package, paints a certain way before you dispose of it. If they don't package it the correct way and they leave it at the landfill and it causes a pollution condition, non-owned disposal site coverage would be what would be triggered. So next is non-owned location coverage. Kind of moving with the theme here. It's exactly what it sounds like. It's coverage for locations that the insured may or probably doesn't own, but may have an interest in. So the best example of this is a shared warehouse. So let's just say they're working at they're leasing shelf space at a public warehouse. Well, the warehouse manager will sometimes require them to carry site pollution, because they're storing, let's just say, chemicals or paints or something like that, and sometimes just miscellaneous goods. Depends on the carrier, or depends on the warehouse. This particular coverage part would be what we would offer, and it's typically used in that situation. So last and certainly not least, we're going to talk about contractors pollution. I mentioned earlier, this is how most carriers offer transportation pollution liability. So you'll see a contractor's pollution form, and underneath that form, you'll see a transportation pollution liability endorsement. So when you tell your wholesaler to go get you a TPL quote, and they come back with a CPL quote, don't ream them out too bad, because most of the time that's how most markets address it. So when you see a CPL quote, just read down the form schedule and you'll probably see TPL being offered as well. So this is coverage that's offered away, for any work that's done off the insured premises. So if they have any, contracting work outside their transportation exposure, and this is really common in the energy space for us, there is coverage there for that. So this is used to address those types of needs where they're working, off-site, and may or may not need more than just transportation pollution liability. So I believe that's it, Tommy. Thank you very much for having me today. Thank you for getting this together. And yeah, do you have any questions for me?
Well, Cody, I don't have any. I think that's well done. What I want to encourage the marketplace basically is that never rely on the MCS 90. The best coverage is coverage. to address any kind of these pollution losses. CA 9948 is a standard, good endorsement and all that, but it does have some limitations. A lot of it depends on what your insureds have. If they have a facility with cleaning facilities or a garage, or as you pointed out, fuel facilities. Some of the audience understands the exposure that I shared with you earlier. My largest uncovered exposure was from a fueling facility that's governed to my favorite risk, and most people know that's my beer company I insured forever, where they took the runoff of those trucks they filled up. It got in a low spot in their property. $65,000 later, they had to clean it up. And that's the kind of stuff that happens that we don't even think about until a loss happens. So this is an alternative to it. If you cannot get the CA 9948 because your carrier does not offer that pollution buyback, then absolutely we need to look for some kind of this, because the MCS 90 has that reimbursement provision in it. And so your insureds will have that exposure. Or second, if I'm an insurance carrier that I cannot offer pollution coverage, then I would want to be aggressively to make sure that my motor carrier is buying pollution coverages with MCS 90. Again, might depend on the cargo they're hauling. But as you mentioned, two things. I have a mulch contractor. You mentioned mulch is pollution loss. The water, salted water, it could be milk in a creek. So it's not only the things that blow up and smell bad, but it could be those things too. This is an alternative that our agency looks at. It's readily available through wholesalers, through our members in the foundation, and we recommend you going looking for Cody or some other product that wholesaler might have. With that said, Cody, you got anything to close this with?
No, sir. I believe that's it. Again, just thank you very much for having me.
Thanks for your time, and we appreciate it. Next month, folks, you might want to get your claims department involved in it. The truck stop for July will address mediation and help your insured understand why the policy is being mediated, and some help both from the claims side and from the insured side dealing with the mediation with a good friend of ours, Dave Henry, who is an original honorary member of the foundation, to hear that. So we'll see you then the next Thursday at 2 p.m. Y'all in July. In August. So y'all have a good weekend, and we'll talk to you later. We're out of here.